Hey, welcome back to our channel. This is going to be part 2 of our series where we talked about standard terms that are on both the life and health insurance exam as well as the property and casualty insurance exam. There's an overlap. I want to say it's about 30%. So if you really nail your definitions, it's going to help you on both exams because it just takes down that possibility of missing one on the next one if you're taking them separately. So here we go. So first up, aleatory. Aleatory is going to be on both your exams. I almost guarantee it because it is just such a term in the insurance industry. So aleatory is the unequal exchange that is in an insurance contract. So even though your premiums may seem high, they're extremely small in comparison to the amount that the insurance company would have to pay if, say, your house burned to the ground. So even though you're paying $2,000-$3,000 a year for house insurance, the $300,000, $400,000, $500,000 that the insurance company is going to have to pony up if your house burns down is much more. So aleatory is that unequal exchange of values. You are giving something very small in exchange for the possibility of the insurance company having to give something very big. Okay, the next one up is indemnity. Indemnity is a term in all insurance, so you are probably going to see it. You will for sure see it on your P&C exam, and you will probably see it on your life and health exam. So indemnity is the concept of insurance restoring you to your position you were before. So for example, if you damaged your car, they repair your car. They don't go buy you a brand new car if your car is repairable, because obviously your car puts you back to the where you were. So it's the idea that you are made whole again without profiting from your claims. So it just brings you back to like it didn't even happen. I know sometimes in reality that's not always true. In the event of a total loss, sometimes people don't get as great a car as they had, but for exam purposes, it makes you whole again and restores you like it didn't even happen. Defamation, this is probably going to be in the state-specific questions from your exam, but this is one of the prohibited activities that you cannot do. So defamation is prohibited because basically what you're doing is you're saying something untrue about another agent, a company, or a competitor. Like maybe you're saying that they're going out of business or they are going to have trouble paying their claims, and it's malicious and it's false. So it's an forbidden practice. Just don't say nasty things about your competition. Next up is fiduciary. There's a half and half chance this is going to be on your P&C exam as it applies to you holding funds for the insurance company, and it will almost for sure be on your life and health exam as it pertains to the annuities portion. So fiduciary is a person that is in a position of trust. You are responsible for acting in a manner that is in the best interest of your clients or in the best interest of the person who you are holding the funds for. You can't just take those funds and do whatever you want with them. They belong to the insurance company, and you can't just take that same with your clients and do what works for you and shove them into an annuity, because it would make you a great commission when it isn't in their best interest. Producer, that's you. So you are going to be the producer for the insurance company. That means you are the one field underwriting or writing the policy. So a producer in property and casualty is the person licensed to sell or negotiate the insurance policy on behalf of the company. So you have the, and it's the same in life and health. You serve as an intermediary. You help your clients understand the insurance needs with life and health insurance. There's a lot of details there. You are responsible for ensuring all of those details are there, that the person has filled out all the information, all of that medical information, and getting it to the insurance company. Subrogation, this is going to be on both exams almost 100%. It is the right of the insurer to pursue a third party that caused the loss to the insured. So they can take over and sue them. They will do that in the case of a property casualty claim. Say your neighbor accidentally burned your house down. Your insurance company is going to step in and sue your neighbor for that to be recovered. And in the event of life and health insurance, it's more if somebody was causing you some sort of event that forced them to sue to recover the damages. Utmost good faith. This is an underlying insurance principle that will be probably showing up in your exam. It means that you are being truthful and honest. The concept is that you are entering into this expecting everyone to be truthful and honest. So the insurance company you're not expecting them as the person getting insurance to conceal things or disclose any facts, and they're not expecting you to disclose things like, for example, calling yourself a non-smoker and really you are a smoker. So everyone is expected to behave in the most good faith way, and basically no fraud or misrepresentations on either side. A material misrepresentation. So we all know what a misrepresentation obviously is. It's the material part that makes it insurance. So something that has been disclosed that would have altered the decision that was being made. So for example, you said you were a non-smoker and you really were a smoker, and you died much earlier because of your smoking habit, and your life insurance paid out. That obviously would have been a material misrepresentation because it affected your insurance. If it doesn't affect your insurance, it's not something that's material. Like if you put that you were 205 pounds, and then when you really went and weighed yourself, you were 202 pounds, it's really not material for your insurance because it didn't affect the underwriting. So if it affects the underwriting and it's relevant to the decision they would have made, then it is a material misrepresentation. A binder. You are going to be issuing binders once you're an insurance agent because you will have a binding authority. So this is basically writing a temporary policy for somebody. In car insurance, it's often 60 days, so that you would write a temporary policy while their actual policy went through underwriting. So sometimes you will see that you will write a homeowner's policy and it will not get issued because how the home was presented wasn't really how the insurance company sees the home. So they just let that binder expire. You will also issue binders in life insurance. When you write a life insurance policy, you will be writing a binder that will take it back to the start of the application under the condition that the underwriting is approved. On that one, that can be a yes or a no, but it would be relevant if, say, you were to die the day after you paid for your life insurance policy and it wasn't through underwriting yet. Then the binder would make it so the insurance company would have to pay your insurance policy. The insuring agreement. This is going to be one of the parts of the policy, and I really think you need to learn all of the parts of the policy. I use the acronym DICE for the parts of the policy. That is your declarations, your insuring agreement, your conditions, and your exclusions. So there's a couple other parts of the policy, but those are your main parts of the policy. Find a way for you to remember the different parts of the policy, because I will guarantee that is going to come up on both the P&C and the life and health. So your insurance agreement, the insuring agreement part of the policy basically lists the effective date and the renewal date, who the parties of the contract are, as well as the obligation of the insurance company to provide the insurance stated in the policy. So it's going to have you, the insurance company, the start date today, and the renewal date being, next year, a year from today, or whatever it'll be. So just keep in mind what the insuring agreement is and really know all those parts of the policy. Can't stress it enough. They're all going to be on the exam. Endorsements. These are things that add or take away from a policy. So normally they are addendums to add an endorsement. So for example, my personal favorite on homeowners insurance is to add backup of sewer drain endorsement, because if you ever had that backup in your house, you are definitely going to want to make a claim on your insurance. Some other ones that there are you can add an Airbnb endorsement. There are other endorsements you can add to your life and health policies. So just know that endorsements are things that are added usually, or addended to the policy. Sometimes there is something that's added later after the policy's been issued. Proof of loss. This is what you are going to need to provide in order for an insurance company to pay out a claim. So this is a formal written statement. This isn't like calling your insurance and say, hey, I've had an accident. This is when they actually get you to do a recorded statement, or they get you to do photographs and supporting documents, receipts, death certificate, a obituary in a newspaper. A lot of insurance companies for life insurance take obituary instead of a death certificate, or they need it as well. So it's the proof that you had. So if you had a health insurance policy that you had gone and paid something out on, and you were expecting to get it back from the health insurance, like say you had hospital income and you'd been admitted to the hospital, they're going to want the itemized bill from the hospital to prove that that actually happened before they pay you. Exposure. This is one that most likely will be on there. Be sure you know what an exposure is. It refers to the level of risk or the potential for loss. So something that is an exposure. Smokers have a higher exposure for dying from cancer. Smokers also can die from other things, COPD. They also have higher health claims because their health can be more poor than somebody that doesn't smoke. Where also people that are race car drivers or just think they're race car drivers have a higher exposure of having a car accident. So those things are, when you look at some insurance companies where they want to put the little beacon or little plug-in into your car to see how fast you're going, that's what they're looking for. They're looking for giving you a discount based on you not having a whole bunch of exposures doing that. A rider. A rider will be on multiple different kinds of insurance policies. It's basically an add-on provision that modifies. Remember, we talked about endorsements. Riders cover a little bit more, kind of a little more far-reaching word than an endorsement. So a rider can add something to a life insurance policy, like a child term rider, or a disability waiver rider, or a guaranteed insurability option rider. Those are all things that are tacked on to life insurance policies. You pay for the extra benefit or the extra coverage. There's going to be normally an additional charge for an additional rider. Conditions. Remember those parts of the policy? This is another one of them, really important. Conditions are specific rules, obligations, and provisions that both you and the insurance company have to adhere to. If you fail to adhere to them, you could result in your policy being canceled or your claim being denied. One of the conditions of a homeowner's policy is that you maintain the property. So they sometimes come out and check. And one of the conditions of obviously a health insurance policy is that you pay the premiums. So if you fail to do that, then they will, you will not have it. Also, if you said something in it that was not true, or it was something that was very conditional. So they have to pay you if they've agreed to those conditions, and you have to be doing those conditions in order for the insurance to be there. Okay, kind of jumping around a bit. Admitted insurer. This is going to be probably in the state part of your exam, along with like what is an alien insurance company, that kind of thing. An admitted insurer is an insurance company that has been authorized by the state insurance department to operate and sell policies within your state. So that means that whoever runs your Department of Insurance for your state, your commissioner, your superintendent, that person has given authorization for that company to operate in that state, making them an admitted insurer. So it's one of those reasons why when you change states, you have to go get new insurance on a lot of things. Not necessarily your life insurance, but your health insurance, your car insurance, obviously your homeowner's insurance because you moved. But those things you have to go get new insurance because you're under a new state. You have to use an admitted insurance company in your state that uses the rules that are set out by your state commissioner, superintendent, whatever he is called in your state, and be sure that you know exactly what he is called in your state and how he gets his job. Is he elected, appointed, etc.? Transacting insurance. This is what you are doing when you are selling, not just selling insurance, but when you are soliciting for insurance, you're advertising for insurance, you're negotiating the contracts with insurance, you're executing it so people sign it, you're also servicing the policies. When someone calls you and asks to change their deductibles, that has to be a licensed person because you are transacting insurance. So unauthorized people who are not licensed cannot perform any activities that would be defined as transacting insurance. You've reached the end. That's it. So go back and circle back onto part 1 of this because there's all kinds of definitions. You can use definitions to be the difference between a pass and a fail. There is so much on the exam that is definitions. If you really nail down the definitions and your state stuff, if you're at the last minute, read your state specific stuff and go back over your definitions, and that should give you a really significant bump on your exam. I wish you the best of luck with your exam. Please like and subscribe to our channel. We would love to keep doing these and helping people get better and better with their exams. Have a great day.